morning. We look at long-term investing and short-term investing, do just a touch of day trading, and then right back to answering all the questions that you have out there. You can ask anything you want. What you don't see is this. You don't see the chat, and you don't see the Q&A window, which is how everybody's communicating with me out there. So come check us out on a trial, if you will. All right, for everybody else, good morning, and here are our mission objectives for the day. We're going to grow our money, protect our money, and live off our money. Specifically today, what we're looking at is growing our money through our long-term investing topic, which is sports gambling. This has kind of been on fire, this whole sports gambling section. There was a huge announcement yesterday that affected DraftKings, and that's why I was up almost 20% yesterday. And going forward, if the world is, work from home, watch from home, all of this stay home sort of stuff, people do need an outlet. So this is one of the things that we can possibly capture on, because I do think it has more room to run. But our question, so we're going to talk about that. And then our question of the day is going to be, what is the difference between debt and leverage? So a lot of people don't understand this. It's kind of a fine line, but debt is bad, leverage is good is kind of the general philosophy. And I'm going to start talking about how that applies to your investments, to buying a house, that sort of, starting a business, that sort of thing. So stick around for question of the day. Our flow for today is going to be long, short, open, short, long, and that means we're going to start out with a long-term view. We're going to go around the world and take a look at the markets and talk about what happened. Come back to the U.S., talk to the headlines of the day, and then we will get into the long-term investing topic of sports gambling. There's the 6 names we're going to look at. Those are the ticker symbols. I'll have those pulled up for you with the charts. From there, once we get within about 10 minutes of the market open, we are going to look at some day trading opportunities. Again, past 3 days, going back in the last week, the day trades have worked like a champ. We use a gap and go strategy, 5 to 10% either up or down, and then take the stock in that direction. In and out of the trade before about 10 minutes after the market opens. So it's a very surgical style strategy for day trading, which is one I used for a year when I retired and I was opening my business. I needed to be able to feed my family. So it's just something that I've used for years, and you'll like it if you follow it. So we'll do some day trading once the market opens. Again, we'll stick with the day trades to see if they work or they don't. And once we're done with those, we'll come back around to questions. We will talk about what's ever in the chat, answer the questions in the Q&A, and then we will go in with the question of the day. All right, for contingencies, if you have any issues out there, go ahead and contact me at Steve at OTOT now, and I have tech support standing by to be able to take care of your concerns. And finally, there at the bottom in bold, this is a financial education presentation. I do not know the specifics of your own situation, so you have to do your own due diligence before you do anything before you act upon anything you hear in this presentation. All right, let's switch you up to TD Ameritrade's ThinkPipes platform, my favorite. You know that TD Ameritrade and Schwab's going to merge. Well, they're keeping ThinkPipes, which is going to be huge. So for all of you that are either addicted to ThinkPipes or Thinkorswim, which is the retail version, a lot more functionality than the Schwab stuff out there. So I really like it. All right, what you're looking at here is a 1-year review of the SPY. So roughly the S&P 500, 1 year left to right. What you really kind of want to focus on is what's going on lately. We know it's a V-shaped recovery. We know it's been huge. It's had a few days of selling off. Market goes higher. 1 day of selling off, small day the next day, and market goes back higher. So this is really kind of a market conflicted. There is the doom and gloom of the election coming up, which I do think wins out ultimately, and that the market ends up going lower from here. But there's enough excitement of, especially in the tech names that have been on fire, those actually corrected, meaning they came in 10% or so. So people are buying up Apple here. People are buying Amazon here. People are buying Google here, Facebook, all kind of the big names that you think people are still buying those. Well, people are buying them, then that means they're going to be moving higher still. So a market conflicted, if you will. So I think there's danger in this market. I think it pays to be conservative, but there are still a few things I will outright buy. A lot of them are electric vehicle stuff and sports gambling, which is why we talk about that stuff regularly. Remember, I've said as long as we hold 300, I don't particularly care. This would excite everybody because this would be another drop of about 10%. Honestly, from a technical perspective and how 2020's turned out, that would not shock me at all if we ended up down here around 300 on the SPY. So we shall see. Let's zoom in for the last 5 days specifically, see what kind of momentum we have. So this was last Friday, kind of all over the place, but ended up down. And then yesterday we had the nice move up at the beginning and then kind of settled in, but still stayed in the green all day. So, and then look at these, after hours up until this dashed line, which again is 8 p.m. Eastern, stop trading, and then opens back up at 4 p.m. Eastern, really kind of straight up from there. So a lot of powerful forces higher. All over the news this morning is the vaccine, and is it going to happen by the end of the year, that sort of thing, and it appears kind of that is, and I do believe it does happen. And Trump saying weeks, of course, shooting for prior to the election is probably what he's thinking. That's my guess. But yeah, a lot of positive momentum this morning. We'll see if that holds into the open. As far as the calendar, couple of earnings that were out in the morning, sometimes some smaller names. Well, Scott's Miracle-Gro is not all that small. They beat earnings, plus 6% right now. We'll take a look at them from a day trading perspective. And also Mr. Cooper. It's kind of an unknown, a not well-known mortgage name that's been on fire. They crushed earnings. They're up 5%. So some good earnings out there. And then tonight we have Adobe, which is a big one. We also have FedEx. It'll be interesting to see what FedEx says if they're able to make money in this environment. Well, with all the infrastructure and personnel that they have, if they can make money, then anybody can make money. So we shall see. All right, let's take it down to CNBC, and we will take a look at how the market's reacting around the world. So here you go. We'll click refresh, and you can see our futures this morning. So up 200, there's 225. Apple gains more than 1%. So yeah, it's been down quite a bit. So I'm looking at another screen. So about 116 or so this morning. So it's recovering from where it was. Remember, it almost touched 110, but now it's back up to 116. So was up around 130. So things bounce all over the place. All right. Let's take a look. So almost about 1% up in the markets there. As far as the Europe, again in the green pretty much across the board, some more so than others. We look at Asia, you have Japan down, China up, Hong Kong up, Australia down a little bit, Korea up a little bit, so kind of mixed across the board. Here's our numbers from yesterday. Again, I really look at the volatility down at 25. I think it'll get back up to 30 again going into the election. So a long ball trade is something you could consider. For a pure entry, I'd rather you be down at the 22, 23 before you get in it because there's kind of a natural bottom there. But it's a good place to be if you think the market's going to drop going into the election. Bonds, a little bit of creeping up over time here. And then oil, some good news yesterday. It bounced a little bit. Almost up to 38. So that's a good sign of a recovery. I think that's going to be a challenge to get that back above 40. We shall see. All right. And then the precious metals increased slightly across the board. All right. 4 headlines going in this morning. You know who that is. That's Jerome Powell. So Federal Reserve will stay on hold till 2023. Let's talk about that for a second. What that is referring to is interest rates. So interest rates on hold till 2023. If you remember his Jackson Hole speech not too long ago, yeah, interest rates are going to be on hold till about 2030, if you ask me. And we're starting to see how it's a little bit of a square corner we've painted ourselves into. When you take interest rates to zero, again, we tried in 2018 to raise them off of zero. We had 3 raises in 2018. And then the market dropped 20% in December. That was a little rough. So yeah, right. It's the we tried to raise after having them down 7 to 8 years. So I could see us having low interest rates for a decade, which ties naturally into what I'm going to talk about today as far as debt and leverage, which specifically is a closet way of when people ask me, I literally get asked this every day is, hey, should I pay off my house? Well, I will answer that in the question of the day later on. But Federal Reserve stay on hold at least until 2023. Again, take out the 2, add a 0. I would be shocked if we come off a 0 in the next decade. So bad for savers, bad for people that live off fixed income, bad for people that want CDs, bad for people that like money in the bank. All of that is just bad, bad, bad. It's not going to make anything, and it probably won't make anything for a decade. So the good news as a market investor is that forces people's money into the market if they want any return whatsoever, which they do. And it forces not only the individual investor into the market. If you think of like Harvard Foundation that's got millions set aside, they can't get it done in investment grade bonds anymore, so they're having to take market risk. So a lot of money that flows into the market, which means market screams higher. So we shall see. All right. Haven't read about Open Door. I'll have to check that out. All right, see what else we have to talk about this morning. Noon today, noon Eastern, that is. So depending on your time frame, is the Apple online presentation against virtual this year. These are always cool to watch. Expecting a new Apple Watch that's cheaper, because it was kind of creeping up to almost $400. It's like, come on, Apple, let's make something a little bit cheaper, like they did the phone this past cycle. They made one that's cheaper. They also have a new iPad out with several things. We are not expecting the new iPhone 12 versions to be released today. If they were, a bunch of stuff would have leaked already. I am pretty sure of that. But it is fun to watch. All right, there's one headline that I wanted to find for you, and I'm blanking on it because it's hilarious. And it looks like it's going to elude me. See if it was up here to the right. Nope, don't see it. All right, you have to give up on that headline then. All right, let's take a look at the DraftKings. So getting into our sports gambling investing theme. I've been a favorite of or a big fan of DraftKings. There's only a few names in this space. We're going to talk about them all. This was the move yesterday, up 17%. You've heard me say I have too much of this. I definitely have too much of this now, because it was a shocker yesterday when an announcement that I had no idea was coming all of a sudden pumped the stop almost 20% right after the announcement. And that's DraftKings partnered with ESPN. And there's a whole bunch of things that go into this partnership, but DraftKings has been squawking. The CEO has been talking for about the past month on how he wants to be more than just a sports gambling company. It's like, okay, I don't really know what that meant. And a lot of CEOs say a lot of things that are, hyperbole, if you will. You can't really trust them. Not that they're lying. It's just that they have these big plans, and you can't always assume that these plans are going to actually go through. Well, that's what he has been alluding to. And you can see this, the run up in the stock in the past, month has been, hey, we're more than just sports gambling. It's like, okay, can't wait to hear more. And it's just like, wait and see. So all these trend lines that you've seen that just got broken by the stock screaming higher. So that's where DraftKings is, all-time high yesterday. Probably going, I would imagine that'll continue right on into touching 50 today. We shall see. So let's look at some of is this a good investment? It's too early to pay a dividend. It is profitable right now, but projected to not be profitable because they're doing so much spending. So they're hanging out right at that profitability edge, which I generally don't like. Amazon did this dance for 19 years, and that kept me out of the name. So, hey, I'm old. I got that, but I can also learn. I get it. You have to pay a little bit closer attention to what they're exactly trying to do when they spend so much that they force themselves not to be profitable anymore. But that's what's going on. So something to keep an eye on there. Here's the raw number. So they made 6 cents a share, and they're spending so much that they're projecting that they're going to lose 83 cents per share. So a lot of sponsorships out there. DraftKings name is everywhere. We'll see. So if you go over to the right-hand column, obviously some amazing returns, 350% year to date. I didn't get in. I don't have quite that. We got in around the 200. We're up over 200, I think, across the board, for folks that have it, which is almost everybody in the room. That's with me anyway. The issue, short float. Yeah, there are some people betting against it. Some of those would have been wiped out yesterday in this move higher. But so we shall see if there's still a big short presence. If there is, that can weigh down on the stock pretty hard. So that is DraftKings. Let's move over and talk about other names in the space. I do consider DraftKings best of breed because they are aggressive. I don't know that they necessarily do anything different than the others, but they're aggressive and they have good leadership. So when you think of if the horses are the same, you'd bet on the jockey. Well, the jockeys in charge of a DraftKings, I think, are better than the others. That's an opinion, but so far it's played out. So here's that same chart that we were just looking at over here on the Schwab Street Smart Edge platform. I put Disney up here to the right. Again, that's the parent of ESPN. Disney should have jettisoned ESPN years ago. For some reason, they won't let go. They literally won't let go. If Disney could get rid of ESPN, they would scream higher. But when you think of a sporting event, i.e. like the University of Texas football game Saturday, just a couple days ago, just looking at the sheer payroll of the number of people involved in bringing that broadcast to the TV is pretty eye-watering. So it's just not a long-term money winner. So Disney should get rid of it, but that's why they haven't recovered either as well to where they were. And, theme parks can't open up until they are all open, but only to a reduced capacity. So that affects the overall profitability. So over down here, the next three, if you will, are all direct competitors to DraftKings. Penn is the Penn Online Gaming. They're the parent owner of Barstool. So if you hear Barstool Sports, all of the online gaming associated with Barstool, that's those guys. They've done pretty well, obviously. LCA is the special purpose acquisition company with the owner of the Houston Rockets. That's been on fire lately. Again, here sometime soon, Golden Nugget Online Gaming, GNOG, is going to be the new ticker symbol for that. The last one we'll talk about is Flutter Entertainment, which is a European firm, PDYPY, that's an American Depository of Receipt, but they are the parent owners of FanDuel. So really when you think of the head-to-head, it was DraftKings and FanDuel. Well, DraftKings has slaughtered FanDuel. I mean, slaughtered them. So, but they're still around. And then you have your two minor players, which are Penn Online Gaming, as well as the Golden Nugget Online Gaming. So overall, DraftKings is the biggest in the space and most aggressive, and I think has most room to run higher. If you want to just go into, I'll take the theme and everybody that's involved in it, because really what you're doing, you're taking advantage of a sin, if you will, which is gambling, which is negative expected value. People that do this, there are some winners, but most lose, and the house makes money each transaction. So if you want to be on the right side of the anti-gambler out there, then just take the ETF. You see the ETF is doing just fine. So not a bad way to play it. All right. That's all I have for our long-term investing. Again, I like DraftKings. I'm not selling here, even though it's getting I've already trimmed from the initial double that most of us got, and we're just holding the rest on these. Same thing with LCA. I'm not selling a share of LCA until they actually do their GNOG ticker switch, and then I'll have to see. I don't know until I see what happens. All right, let's talk about some day trading stuff. We have 10 minutes till the open. I have several, just like yesterday, several names long, and again, it's hard to pick the name that's going higher even when the market's in the green. But if you can pick the couple out of the weeds that are going lower, like we did yesterday, you saw how it basically in about a minute and a half hit our 3R point. Might have even been less. I did put it out on the YouTube channel. If you're not subscribed to the YouTube channel, you should go to On Time on Target, Anchor Star, and you'll take you right to the channel. Subscribe to that, and then you'll get notifications every time I put out a video. So if you do miss the morning brief, you can get notified there, in addition to the email that you already get. But I do cut out the plays of the day, which you may find more interesting than the entire replay, is to get down just the play of the day. It's generally about a 3-minute clip that talks directly to that. So we'll talk the downside first, because there's not many out there. And again, use the chat, please, if you're interested. If you've done some research this morning and you have some ideas, put them in the chat. Share them with everybody. I'll certainly give you my opinion. It'll be honest, so if I don't agree, I don't agree. I'm not looking to be confrontational, just absolutely straight feedback to whether I like it or not. So let's look at the negatives first. So gapping down, Nikola has been a story that's been in the news again. Sold off hard. big news on with General Motors, the partnership with General Motors to produce their Badger truck. Super good idea. And then, of course, now we're back to the, are they lying? Have they been fraudulent? A short seller accused them of a whole bunch of things. GM is so far standing by. Mary Barra, the CEO, was on last night on CNBC going, we did our due diligence with Nikola. They're not lying. We believe everything they say. Gutsy move, because this particular CEO of Nikola has been burned before. So how much due diligence did they do? But anyway, I do think it's going to be a train wreck. I like Workhorse much better, obviously, from a investing EV truck perspective. But market closed up here. It's down at 33, if you will. So nice gap down. Again, 6%, plenty of volume for us to trade. So there's the investor alert. This guy, these guys, Faruqi and Faruqi, you see these and they're kind of just headlines, but you'll see, you know, hey, if you're an investor who suffered losses, contact us. They'll bring some fraudulent lawsuit against them. Hindenburg, that's the guy, that's the short seller that took it out of them. They remain short. So pretty much a battleground stock, but I think there's more people that are going to believe the short sellers out there than they are the actual company or GM leadership on the issue. So there it says 7%. So anyhow, I really like that from a short perspective. And we made money on this the other day, short as well, part of this train wreck, if you will. All right, the other one, PPD. I don't know what PPD does. PPD, let's see who they are. Oh, they're PPD Incorporated. That is not the most helpful information. Share issuing, they're at 33.81 down to 33.50. Here it says earnings, losers for PPD. So really not enough move there. And then the other one is LEN, Lennar. That's a home builder. It may not be gapping down enough. Low volume, 79 to 63. So it was up here. Let's back that chart out a little bit. It's got plenty of room to go to the downside, but that's not quite a big enough move so far, but we'll keep an eye on it. That's all I've literally got for the shorts out there. To the high side, we'll talk about the earnings first. Mr. Cooper, stock has been on fire, 18 up to 21, closed here. Then went up 22, 21, so it's hanging out right here right now. So it's been a lot higher. It's kind of come in. Not in love with that. Scott's Miracle-Gro. Low volume, can't trust that. Kind of like that out of the gate, though. So it looks like it doesn't trade after hours. That's why it's got such a low volume. So we will actually take a look at that and see if we can catch the jump on that. All right, EALS, I don't know who they are. And maybe I wrote it down wrong, so CALS. Nope, get rid of that guy. All right, CWH, going long, I don't know what they are. CWH. Camping World Holdings, 36 up to 38. There's going to be volume by the time the market opens. Okay, ahead of RV demand prompts upbeat forecast. So again, they're up, they're moving higher on earnings. CWH, Camping World. So I kind of like that idea in the RV space. I do have a couple friends that just bought RVs. Interesting. I don't think my wife would go for it, but interesting life. PLT. It's PLY, PLT. Plantronics. The rest of these are going to be medical. This is medical equipment. 1172 to 1235. Kind of low on the volume. So not going to take a stab at that. BNTX, you know, they're a German firm, vaccine producer, plenty of volume, 67 to 70. So they're up here. See if that's an all-time high for them. No, it's not. So they were up at 76, so it does have room to go higher. Okay, they got a big grant from their government, so I could see BNTX going long. They're up 5% right now. I like that. Invax is a name we've seen played both ways. Looks like it's recovering. Plenty of volume, 105 to 112. plenty of room to move higher, so I like the way that's set up as well. All right. That's enough to take a look at. We'll come on over to the tabs. Again, nothing in the chat there. All right, Apple up, not quite enough. Tesla up. Nikola down 7.6. Again, that's our number one short, so you can set your set things up for that. Don't know anything about this Sava other than, wow, look at this. It went from 325 up to 7. I don't know if it probably can't maintain that. So anyhow, that'll be a secondary short. Certainly meets our numbers. Plenty of volume. All right, 3 minutes out. Zip through these real quick. Tesla, Nvidia up 3%. Amazon up. Here's our decliners, looking at volume first. Here's our Nikola, 7%, heart of the envelope. Lennar only up to half of the volume we need. Fiat Chrysler gapping up 10%. There was news there. I didn't catch it. There's our Camping World Holdings, CWH. There's the Scott's Miracle Grow. All right. I've seen enough. Let's go ahead and set up our charts here. We're going to set up Nikola first. It'll be short. We'll go short, long, long. Actually, we'll go short, short, long. And then we'll put CWH, Camping World, in the right-hand side there. All right. So let's set this up. Back to Think Pipes, we have 4 screens. We're going to set Nikola here in KLA. And then we will go Sava here, SAVA. And then I don't know if Camping World has enough of a move in it. Well, we're going to look at SMG, Scott's Miracle Grow, which had not moved pre-market. So we'll try to catch this on the pop. I don't do this a whole lot, but I do kind of like it from a long perspective of you kind of take it right away, and then as things flow higher, and again, it was an earnings play. So looking to get into this right away. We shall see. All right, for Scott's Miracle Grow, you're going to need at least a $2 stop, probably more if we're taking it earlier. So consider, and that would be a long. All right, Sava down at $7. You could probably do a 10-cent stop, maybe 15, depending on whether we get it. I'm sorry, that's a short. So we'll take a look at that. And then over here with NKLA, probably going to need a 50-cent stop or so. So a $1.50 move to the downside. That does make perfect sense that would be able to do that. All right, play of the day. Here we go. We have SPY on the left on a 1-minute chart. We'll zoom in there a little bit. We have Nikola short on the next chart. Again, about a 40% stop is what we're expecting. Sava short on earnings. Again, about a 10-cent stop, maybe 15. Then we have Scott's Miracle Grow off to the right. And we're looking for Scott's Miracle Grow long.
Bottom of your screen. Jim, as we
opening bell. So we got that. Both of these are our shorts kind of screaming down. I don't like that. Scott Miracle Grow not open yet. You can see the overall, this one, I just have to say we missed it. It's down at 9%. So unless that backs up some, both of these we just kind of missed. All right. Not a lot of volume here. I'm looking at taking it right here, actually, and let me do some math. So buck would be $2, so 140. That'd be way down here. Maybe we could take it closer than that. Up 3% again on earnings. Haven't seen any movement in this chart, so I don't really trust it. So let's just watch it and make sure we get another tick here. Both these are screaming down, so unfortunately, you can't just take them when they're screaming down, so we do need them to back up so we can get a better entry on them. Ooh, Nikola's backing up. Let's talk about that. So the entry here would be 32.60 with a 50-cent stop. So again, taking it short, 32.60 is the entry point and short. $0.50 stop on this. I should go 40-cent stop. There it is. 32.60 is the enter. We'll go 33 is the actual stop to the upside. 33 here, and I base that off the congestion there. And we are in it going short. Again, legal issues is what they're looking at here. All right, simmer down, chart. I'm trying to draw. All right, so 40 cents off of that, 32.22. This would be the 1R point. Okay, now chart, you can go crazy because I've got my stuff in there. So again, looking for that entry, went down, backed up. I like this nice long doji. You got to wait for it to come in some, and then it's selling off. All right. Ugh, not in SAVA. Can't stab at it here. Like I said, we would need it to come all the way higher. Our only real option was here, is if it came down to 702, goes up to 710. This was exactly the same time Nicola was doing it, would be to enter at 7. So that was about the only option we get. SMG is not doing anything I like, so I'll get rid of that, and we'll look at some other names. I had Scott's Miracle Grow in here. Again, those are longs we're looking at in the right-hand side. Sorry, that's the one that's already in there. CWH was Camping World. That was the one I wanted to look at. Nothing going here on Camping World, and it basically came out of its gap, so that's a failed gap. We don't like that. How's our trade doing? Hanging out in the green there between where we took it and 1R, so that's fine. Just let that sit. Cooper, Mr. Cooper, been on fire up to new highs. Thinly traded there, so that's not uncommon. Let's see. BNTX, again, the German pharmaceutical maker that got the big contract. That fell out of the gap too. It was up 5% earlier, so I would not take that. Invax was another long. Well, none of these longs are working even though the market's going higher. MBC is another name, MBC. That's going higher, gapped up, 47, already moved up over $1, kind of light on the volume. I would not take that higher here. Ooh, it looks like we may get busted out of our trade on Nicola. We shall see again, 33 is where we have our stop set. If you get busted out, hey, minus 1R. That's how that works. And you don't cry about it, you just move on. If it holds 33, we're going to be set up pretty nice. So I tend to stop even when I have my limit in. I tend to stop and stare at something when it's right by, just in case the limit order doesn't execute. But if you have it in correctly, it should. So that's why I'm kind of staring at that right now. Make sure we're back out if it touches it. Again, I like that trying to go higher, can't, trying to go higher, can't, trying to go higher, can't. So that's what's giving you that doji right there. So if it holds here, I really like it. All right, within 10 cents though, so it's pretty close. All right, well, we'll keep an eye on it. If it, remember the limit's in 33 and you're out, so if it hits it, get out. Okay, Sava, excuse me, backed all the way up. I kind of like that. It would need to get up in this range above 713 before we could take it short again. MDC is going higher, and let's see what other names. MRNS. Another medical name going long. Up 43%. Well, that sold off. Look at that. So that was up over 50% to be able to come down here. Small entry point, $3 down to 300. So that's just basically selling off. All right, so our trade did hold. So that's a good sign when the trade holds something like that. So that means we had the stop set at the right place at that congestion there. And we'll see. So we'll continue to monitor. All right, 5 minutes in, we're going to leave the trade for just a second. So monitor on your own screen, if you will. And we'll kind of take a look at the market. There's a lot of these dojis. So the market keeps trying to go higher, but it's kind of fighting itself there. It looks like it might get up to the new high of the day as I'm talking about it. But let's go over to the quote monitor and see what we have here that's going higher. All right, Shell is an electric vehicle truck maker called Tortoise. So they're on the move higher. MNRL is a local Austin-based mineral company. Tesla on the way up. Delta Airlines. The airlines move up on the potential vaccine news. Trade Desk is just a powerhouse name out there for digital marketing. CCX is another special purpose acquisition company that's rumored to become Topgolf IPO. Not confirmed yet, but that's why we have our money in it. Speaking of golf, there's Callaway is up. I think we've made all the money we're going to make in Callaway. So if you have covered calls on your Callaway, I'm just letting it get called away if it holds it. NVIDIA, I saw bouncing around. Apple, I saw bouncing around. So a lot of names in the green. These are all up basically 1%. Shell's really on the move, up to 6% now. Northwest Bio's been on fire. All right, let's take a look at the red side. Nikola selling off. That's good. That's our trade. Workhorse, that's a name I like. I don't like that it's selling off, but it was up over 10% yesterday. Could stream down a little bit. Sirius FM. LCA we talked about. Online gaming name. So really just a few names in the red today. So it looks like in the green and somewhat holding in the green as we go here. All right, there's our trade. Again, we're in the red. We took it here. That's why you see the arrow is where we always took it. And we'll see if it can come back up or no. It'll bust us out. And if it does, no big deal. Just going to check some other names over here. I was assured by a friend last night that Luck and Coffee would be up today. Let's see if that's true. Up a penny. All right. How about that? Okay, we're out of our trade over in Nikola. So it did not work, so we're back out minus 1R, and that will do it on that trade. All right, let's look at Blink and Power, see if they're up on the day. Nope, Blink's down 1% and Plug. Plug's up 3%. Interesting. Okay, all right, so let's see. This trade, it did back. Remember, I said we'd have to go all the way back here, and then we'd have to come down to 7 to be able to take it, and you'd need a 15-cent stop. So maybe that goes on to work. Maybe it does not. Obviously, Nikola busted out, and this is why you don't hang with the trade. So wherever you have your stop, just imagine that there's a lot of other people that have put the stop in that same area. So once it hits that stop, it tends to go higher pretty quickly. Now, that's why what we like on the way down is once it hits a certain level, there's a bunch of people shorting it. So that's what gives you these big, long red stripes that we take advantage of. Well, don't forget, everybody's shorted, it has to cover. So if there's somebody who's supposed to cover at 33 and it's like, nah, I'll wait to see if it hangs out. No, don't, because it's just literally, that's $1 move. So if you have 1,000 shares, that's $1,000 while you're sitting there not trusting your stop, thinking it's going to get better. It's not. Put the stop in and be true to the stop. So, all right, that's what I've got for there. Let me do a little bit of housekeeping. No questions in the chat, nothing to talk about there, or the Q&A. We'll set up for the question of the day. I'll keep you on the big screen up here while I'm talking about some definition stuff on the other screen. Today's question of the day is, what is the difference between debt and leverage? So this is a conversation I have quite a bit, and it's usually a conversation that comes off of the, hey, should I pay down my house? Should, the extra money I have in, should I invest it for my future? Or should I pay off my house? And then it gets into this debt and leverage conversation, which is what I'm bringing to you today. So, Albert Einstein has a famous quote out there: compound interest is the 8th wonder of the world. He who understands it earns it. He who doesn't pays it. It's kind of that thought philosophy when you invest, right? You want that compound interest over years. Well, it's the same philosophy in reverse if you go into debt. So that credit card that you have when you buy something that you can't afford outright, you put it on a credit card and then you end up paying that interest over years. So it's the same thing in reverse. So Since people know that quote and they understand that, they are leery to hold debt at all. So if you are a very financially responsible person, you live within your means, you spend less than you make, you max out your 401k or TSP, all of that is the type of philosophy that gets you into thinking that debt is bad. And most debt is bad. So when we talk about debt, let's talk about the definition first. So debt is an amount of money borrowed by one party from another. So it's used by individuals and corporations to make large purchases that they otherwise could not afford. A debt arrangement gives the borrowing party permission to borrow money under the condition that is to be paid back at a later date, usually with interest. So that's more of the credit card philosophy of you reach an agreement with a credit card company and they say you can go up to 500 or 10,000 or 30,000, depending on what stage of life you're in. Yeah, they'll give you this big credit line, and the agreement is you can use that. And if you do, at the next billing cycle, when that starts, where if it's not paid off, you're going to end up owing interest on that as long as you hold that balance, that debt balance, if you will. Same thing if you were to take a home equity loan. You have a line of credit, a HELOC, a line of credit, and then boom, you use it, and then you pay it off over time and you pay interest along the way. So generally those forms of debt are bad. It's just basically borrowing money from one party to another. I like to say you're borrowing from yourself. So don't piss off your future self by buying a bunch of stuff now, so 10 years from now you're still paying on it. So that's or you try to make your future self happy by living diligently now, spending less than you earn. That way your future self can be basically rich, if you will. I do like to say that you can buy whatever you want now and never be rich, or you can get rich and then buy whatever you want. So people sometimes ask why I have fairly nice cars when cars are obviously a depreciating asset. It's kind of like, well, I paid my dues for largely 30 years while I was in the mainstream workforce. And now that gives me the right to go out and buy stuff like that because I can. If you go out and buy stuff like that first, then you never get to a position where you can go buy stuff like that, if that makes sense. So debt is what a lot of people do to rob themselves of their own future. So that's where we always hear debt is bad. If you hear Dave Ramsey, who's obviously an amazing person who's built quite the industry off of people getting into debt and then helping them get back out of debt, yeah, all debt is bad, and he's a don't care, pay off your house kind of guy, right? Because that's debt. Well, let's talk about leverage, and then we'll talk about the difference there. So here's the definition first. So leverage results from using borrowed capital as a funding source when investing to expand your asset base or generate returns on capital. So it's like, okay, a lot of financial stuff in there. So what does that really mean? Let's talk your house. If you wanted to buy a house and we didn't have mortgages, you would have to save and invest until you get the whole amount to go in and buy the house. Well, if that were the case, that would be a lot bigger event to have to save, $200,000-$300,000, depending on what your house is worth, or maybe a starter home at around 100K, if that even exists anymore. My first one was 97, so nice little townhome. But yeah, as you get into the market, the leverage is what allows you to put that 20% down and then finance the rest. It allows you to do it. Now, whether you should do it, we're going to get to. But that is what's leverage. Leverage got you into your house, unless you just stroked a check and paid cash. But then you aren't listening to this because you don't care. Because if you're paying cash for your house, well, you're in a position to where you're probably not listening to a personal finance podcast, and because you've kind of figured out what you need to be doing out there. But I will say that leverage is what got you into the house. Or if you happen to use a VA loan and put nothing down, just having that VA certificate allows you to get in the house with very little down. But leverage is what allowed you to get into the house. And you think, okay, is a house an investment? Well, technically, no, the house is not, because the house is a depreciating asset. It's the land that the house is on that increases over time. So process that for a second. Everything about your house doesn't just make money for you. No, it gets old and you have to fix it, replace it, maintenance, that sort of thing. So the house itself depreciates as it ages, just like any other kind of thing does. It's the land that it's on and the location where you are in relation to everybody else that is the appreciating part of that asset. So, but it is an investment when you buy a home. It's an investment. So living somewhere is an expense, but actually purchasing the home has an investment component of it. So leverage is what got you into the house. So it really kind of comes down to interest rate. So debt and leverage are pretty much the same thing, except for leverage is a tool to allow you to participate in an investment when you don't have the whole amount to be able to do so. So if your interest rate, I use 4%. So if your interest rate is 4% or lower on your house, I advise folks, do not pay off your house. Take that money and then invest it. Obviously, you can't get that in a CD right now. You can't get that in investment grade bonds right now. Remember, I bought a bunch of bonds a couple years ago. You could find them for 4 and 5%. Those don't exist. Well, you could rebuy them from me, but those don't exist on the outright market now without having to pay up for them because things don't generate that much interest. So in order for an investor to make that sort of money, then they need to participate in the stock market, which again averages 10 to 12%. And it's long-term investing. When you're talking about, do I pay off my house or participate in the market? You're not trying to time anything. You're just putting money into the market, knowing that if you have 25 years left on your bank note, you're better off investing for 25 years, taking all that money, and then you get to pay the house off incrementally through your mortgage payments over time, while you're making a whole bunch of money in your market-based investments. So if leverage is what got you into the house and you're below 4%, then you have really no reason to pay off the house unless you just think debt is the devil and you need to pay it off. And if you do that, you are really, if you're still on your way of building, wealth to become a millionaire or 2 million or 3 million or whatever your fence is that you're going for, you're actually, if you dump a bunch of money in your house, you're actually just delaying yourself achieving that goal. Which, when you say delayed achieving that goal, what does that really mean? That means you and or your spouse are working possibly years longer because of this decision. So if your interest is 4% or below, just pay off your house over time. Even if maybe in your life expectancy you don't have, maybe you're not going to pay it off in a lifetime. Well, who cares? You're going to have a beneficiary that's going to get the house and it's going to have a note with it, but they don't need the entirety of the house free and clear, right? They can take the note too. And that's, then they're in the same situation. They can pay that down over time. So if leverage gets you into the house, then you can keep your money out and use it for other things like investing. Or if you are a real estate investor, and I had this conversation last Friday on an interview with a podcast that I had, went over an hour. It was an amazing conversation about this very specific thing, is if you are a real estate investor, leverage is the game, right? Because you want to tie up as little into each individual property as you can, so you can take the remaining capital and get your foot in the door at another property and another property and another property. So when you use that example, people are like, oh yeah, that makes perfect sense. But what if I'm not doing that? It's like, well, if you're not going to buy other properties, then put it into the market and capture that 10 to 12%. And then that way you get to keep the difference, right? So that is a little primer on debt and leverage. Above 4%, again, think debt, kill it off. Below 4%, think leverage. Or, if you get free money because you bought a new car and it's got a 0% loan, yeah, that's free money. You should take that. If you pay it off, if you pay your car off, that's fine. Or wait the 5 years and just pay it off over time. It's whatever you want to do. But you'll be better off if you're getting a 0% loan, especially, or really anything 4%. You're better off in a full investment, long-term investment mode that's going to create that 10 to 12% return. So that's all I have for today's show. Please reach out to me at steve@ototnow.com with any questions or comments. Thanks again for joining me. And here's to you fighting the good fight every day to be on time, on target with your financial goals.